Really meant more money in my pocket.
Under the One Big Beautiful Bill Act, workers can keep more of their tip money. So when it comes to their tax return,
I would say I definitely saw $600 to $700 increase where I would have had to pay those.
but despite the name, CPA Brandon Kerwick reminds filers tips and overtime are not fully tax free.
Or I think there's a little bit of misconception.
Here's how it works. Eligible workers can deduct up to $25,000 a year in qualified tips, which means those don't count toward the income they must pay taxes on. But that only applies to people who make less than $150,000 a year or couples who make less than $300,000. And it only applies to federal income
It
taxes.
was the largest tax return I've ever received, and I've been working for about 15, 16 years so far.
From the employer side, some restaurant owners say the change reaches beyond paychecks.
You're making more money, you're a lot happier working together, and that ends up for a better guest experience.
This is a transition year, so tax forms haven't caught up, and the IRS is offering penalty relief as payroll systems adjust.
What you should see this year is a lesser amount of penalties for employers.
Experts say workers should keep pay stubs and tip records when filing. Unless extended, these deductions are set to expire in 2028. Sananda McCall, WWL, Louisiana.